So it's not looking bad at all for the Asian markets. But Siddarth Bhamre of Angel Broking also joins in to give us his view on the index. Siddarth, what's the sense you're getting after the up move that we saw yesterday? In the F&O space, what are the key internals that you've watched?
Good morning, Sonia. So on Friday evening, we were discussing that how selling which happened last week was more to do with sentimental selling rather than actual cash-based selling or F&O shorting. Because on Thursday's fall, out of 166 stocks in F&O, there were only 25 stocks which added more than 100 contracts in open interest with some fall in price. So which clearly says that it was not shorting. Throughout this series, if you see FEB series, we are in middle of it. FIs have been buying index options in big way, and most of that buying has happened in call option ranging from 7,600 to 7,000 call options. As market kept falling, they kept buying call option. Now this buying of call option was not against short index positions. They have not formed any kind of short index futures positions. So this is pure naked call buying which these guys have been doing. I won't be surprised if this up move continues for some more time. I understand the apprehension that US market was closed and that's the reason there might be some jitteriness, but it is quite possible that US market would take cues from European and Asian markets and probably try to open gap up today also, which would again have a rub-off effect on other markets. I see this up move continuing for some more time. Maybe we are heading towards 73 odd levels. Those people, I don't know how many people would have gone long in such kind of volatile market, but those people who are waiting to short this market, I think they should hold on to their horses, because I sense there is some more upside room.
Fair point. Well, actually, since we were talking so much about automobile, auto anchs, and then we had yesterday some pep talk coming from the defense minister with respect to orders, maybe the stock to watch today would be Bharat Forge. We also learned yesterday that they're looking to strengthen their ties with Volvo globally. Our correspondent Kevin Lee caught up with Baba Kalyani, the big man from Bharat Forge, on the sidelines of the Make in India conference. Let's listen to that conversation.
Kalyani Motors has a partnership with Volvo. Is this what you'll be showcasing at this Make in India summit?
No, I mean our relationship with Volvo is more as a supplier, the global supplier to Volvo globally. We supply them in India, we supply them in Sweden, in North America, in Asia. So we have a large supply partnership with Volvo.
So any specific target in your mind that you'd like to share?
No, I don't. I mean, in today's world, world has become highly volatile. So it's difficult to put numbers. It was easier to do that 5-10 years ago, when life was a lot simpler. But let's just say that everybody likes to look at new opportunities, new technologies, because even technology is changing at a very rapid pace. We got this whole fourth industrial revolution coming, a lot of digital manufacturing going on. So we are getting into all these spaces, and hopefully this will provide us new opportunities.
Okay, that's the new opportunities that Bharat Forge is planning to get into. But Prakash Diwan, comment on this stock, because it's been a second consecutive quarter of weakness that Bharat Forge has seen in its revenues. In fact, the revenues were down more than 10% in the quarter gone by. Is the story over in terms of at least outperformance for Bharat Forge?
So I don't think so. It's difficult to write off a company with this kind of pedigree and this kind of brand salience that it has amongst its client base. What's happened to Bharat Forge is that a significant part of its auto business, which was to take off, has taken much longer to build up, and that's the right balance that they would definitely be wanting to do, and that's exactly what I think the chairman is also indicating. Because once that is achieved, cyclical negativity will go out of the stock, and then the re-rating on the stock could be slightly at a slight premium to what we've seen, and it could come back into its glory days. And remember, the North American market last year was supposedly bad till December. Numbers were not encouraging at all. But there could be very different things happening this year, because it's the beginning of a new year and the order book could look slightly better. So once that happens, Bharat Forge will probably bounce back, and with the defense thing coming in and getting some visibility maybe in the next 2-3 quarters, I'm sure Bharat Forge is not a stock that you could easily see going down from here.
All right. Well, we still have some F&O options to discuss with Siddarth. But before we get to that, here are some more trading ideas in our Super 6 segment.
My first call is a buy call on Hindustan Zinc. Here the technical pattern is bullish. Stock prices are making higher tops, higher bottoms. In yesterday's trading session, we have seen a positive crossover on the momentum indicator. Buy Hindustan Zinc. Stop loss 159, target 184.
My first stock pick is a buy on Tata Steel, which I think has formed a base for itself and is perked up in yesterday's trade. The stock can get to high levels of 260, which can be a target for this one. One should put a stop loss at 240 and go long on Tata Steel.
I have a buy call on ITC. ITC is deeply oversold, has reflected near-term strength by giving an upward key reversal on the daily chart. Mechanical indicators on the intraday charts are supporting the move, has signaled a buy, indicating the stock's intention to appreciate further from here. One can buy ITC at its closing of around 304, stop loss of 301, and a target of 310.
My second call is a buy call on Tata Steel. In yesterday's trading session, we have seen a massive jump in the price. Prices increased by around 13.5%, and everybody is talking about a short covering rally. Whereas if you see the open interest, we have seen an open interest addition of around 15%. That clearly shows a long addition. I feel this upside momentum is likely to continue. Buy Tata Steel. Stop loss 235.50, target 264.
The other counter I like is again a metal stock. I think NMDC can be bought at the current levels with a stop loss at 85 and a target of 92.
I have a buy call on Cipla. Cipla has reflected near-term strength by giving a high volume recovery. The stock is deeply oversold. The mechanical indicators on the intraday charts are supporting the move, have signaled the buy, indicating the stock's intention to appreciate further from here. One can buy Cipla at its closing of around 540, stop loss of 536, and target of 548.
Okay, those are some ideas in our segment Super 6, but getting back to our guests, Siddarth, you have a couple of interesting strategies, a lot of them in the oil and gas space. You have a buy on ONGC and on Reliance today?
Yes, Sonia. It has nothing to do with crude oil price movement, so it's not a trade that crude has gone up. That's why I'm giving buy ONGC, but purely because of what we have seen in statistics. I'm drawing some correlation from crude oil, but not completely by what has happened in recent past. So we have seen that Brent crude made new lows last month, but still ONGC was taking support around 200 levels and was bouncing back. In this period where crude has been more or less stable, when I say stable, I am talking about around $30-32 per barrel. Because of this market fall, ONGC went down without any formation of short positions. In fact, there was some unwinding. I believe there can be a bounce back in ONGC, which can again take it back to those levels where it was stabilizing before, which was around 220. We may see some formation of long position. I'm not talking about short covering here. They are not. To everyone's surprise, there is not much of short positions in ONGC, despite stock has been underperforming. So I'm expecting some speculative longs which can take it back to 220 odd levels, fix the stop loss somewhere around 191 and go long. Reliance, again, this is the stock which was showing a lot of strength before all this correction set in from mid of Jan, and stock fell sharply. But again, we haven't seen any formation of short positions here. Around 900-920 stock did take support and is now showing a bounce back. I'm not saying that it would again cross 1000 and probably go to 1100 levels which you were thinking before, but it is quite possible this stock can retrace back to the half of the correction which it has shown in recent past. So 991 is what I'm expecting. Stop loss should be near the support of 920, so 923 is the stop loss which I'm recommending for this trade.
Okay, and finally you have Godrej.
Yeah, so this is again a stock. What we have done, Lata, is that we are trying to identify stocks which were not showing significant weakness before this correction. And when this correction happened last week, we identified some of these stocks where we haven't seen huge formation of short positions, and even cash-based volumes were not very significant. So Godrej Industries qualifies for that. The stock again has very strong support in the range of 315, 320. At current levels, I would suggest to go long with a target of 348 and a stop loss of 311. It's a quite forget about the fall in last 1 week, but otherwise it's not a very volatile stock.
Okay, let's do one thing. We'll take a break. We won't get much of a chance once we start getting the pre-opening rates. We're coming back. The pre-opening rates will be with us. Keep an eye on the SGX Nifty. It is still indicating a fairly decent green tick over there, 7,213. It's a futures index, of course, but still that's a distance from the spot rate that we closed yesterday. So looks like we could still see a long opening, a gap up opening, and then take it from there. Back in a minute.